This is the Friday, February 21st, 2014 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
On the show this week, we did not have a chance to talk cotton. We saw a little bit of a price slide there. Talk to us a little bit about what's happening.
You know, it just looks like this market's run out of steam here for a little while. We've got some selling coming in from the commercial side, a little bit more bearish of a supply and demand outlook. I think as we're starting to look forward a little bit. So, you know, it's put some pressure on the market. We see some investment money pulling out, going over to other sectors at this point. Cotton had a nice run. Maybe it needs to pull back a little bit so they can find some buying interest again.
No major news of China selling a stockpile or anything huge.
I haven't seen anything. Now, it doesn't mean it hasn't happened, but you know, I certainly haven't seen anything to this point.
All right. Well, we'll keep an eye on that one here as it goes forward. Like you say, nice rally, might be a time
just
for
pulling back a little bit.
A little correction.
Right.
All right. We had the USDA's Ag Outlook Forum this week. Had a lot of producers talking. USDA, we're getting some of the numbers from the census. We're getting some forecast numbers for this year. Glenn in Bryan, Ohio is just curious, and he's saying every USDA projected number could be questioned or debated. And of course, it's a projection. At the core, were we getting generally bearish, generally bullish news out of the USDA? What was your take on this week's festivities?
My answer would be yes. We are. The numbers themselves probably look bearish. I mean, if we believe the trend line numbers, which, you know, we shouldn't, but if we just take the numbers at face value, we would consider them to be bearish. Well, then you could also build the argument that because soybeans weren't as bearish, in other words, the acreage wasn't as large as what some were looking for, at least not in the outlook number, then that should be considered bullish. You know, so you can come down either side. The most important thing to remember about these outlook numbers is that they're really, in my opinion, and I've had this debate with many on social media, Twitter, they're irrelevant. The market looked at them for maybe 5 seconds and then they moved on. We're going to focus now, unfortunately, on the March 31st prospective plantings report. That's the next big thing. This is just a piece of news at a time when there's very little other news outside of weather.
Okay. Now, you talk about projections, the market not paying much attention to them. Chuck in Winnipeg, Canada, has a question that feeds right into that. The USDA made the projection, soybeans $9.65 average price. What do you think on that number? What does the market think of that number?
I think it's a little early to see that big of a drawdown in the average cash price for the next marketing year. So the marketing year that starts in September 2014 runs through August 2015. We may be a bit premature on that. Could we get there at some point? Yeah, maybe the marketing year after that. But we're high enough now, and we still have enough uncertainty over the type of supply and demand situation that we're going to have, not just domestically, but globally, that I think we're going to stay above that price. We should continue to see an average price somewhere in the double figures, so I think above $10. But we get to the year beyond that, that's when I think we're really going to start to see some problems.
All right. Even if we do start to test that, you know, beans with a 9 in front of them, into that $9 range, assume acres are probably going to shift globally, but like we say, down the line.
Yeah, it's going to be down the line. You know, could we be in the 9s by the end of this year, by the end of 2014, early 2015? Sure we could, but that's not going to drop the average, I don't think, that much to get it down to that 965 level.
All right. Now, during the show, we talked about some of the non-commercial demand, the investment fund demand that we've seen coming back in to the commodity markets. Phil is curious, where are we seeing this on the grains? Are they coming back in on the grain side?
They are. They're not going to come back to the degree that they were, say, from 2007 through 2010, something like that. But we're seeing some buying. They've covered their net short futures position in corn. They've gone to a net long. They continue to build their net long in both soybeans and bean meal. So there is some interest coming in there now. The supply and demand situations have changed to the point where this group is willing to buy in. So yes, we're seeing them come back in, but I don't want to get overly excited about the idea, yeah, we're going to be as big as we were before. I don't think we will. I think we're going to see a short-term buy in here, and then at some point, you know, once we get through the spring, maybe into the early summer, most likely they'll turn sellers again.
Okay. All right. Now, on the show, we talked a couple of times about the drought in California and the effects that's having on the ag industry out there as a whole. And we talked beef during the show, probably not a huge impact. Let's talk a little bit about the dairy side. California, a number of dairy producers out there Clearly, water is vital. Where do you see that market shaping up?
I think this is really the market, as far as agriculture in California is so vast. It covers so much area. But the one that we really focus on, or one of the major markets that we focus on, is the dairy market. And I think this is where it's going to have the largest impact as far as what we've seen so far. As this drought has worsened in California, it's certainly helped to support the Class 3 milk futures. It's pushing it up. Supplies are tightening. And, if this situation continues, I think the milk market's going to find a way to, push higher again. It backed off a little bit from its high, but you get more news of an extended, the extension of the drought, getting even drier, as you talked about in the program. This market, I think, is going to reflect that, and it's going to continue to go up.
And we've been seeing record high milk prices in this range now since December, I want to say, middle of January.
Right.
And probably going to continue for as long as the drought stays in the news.
I think so. As long as it's major headlines, as long as it continues to, to mess with the supply situation. Can we go to a new high in the milk futures? Certainly, I think so. I mean, there's just plenty of support in there right now coming from the fundamental point of view.
All right. Now, Darin, during the show, I had to cut you off. We were talking crude oil. Just wanted to bring you back around before we let you go.
Right.
You're seeing, we're probably going to see that pickup in demand as soon as the weather breaks.
Right.
Pushing us up into that 105 on crude, do you think?
I don't know. I think we're about to hit a short-term top in here. We've seen this early seasonal buying, which is very normal. Normally, the initial rally usually lasts up into April. So we've moved so far so fast. We may just about have burned up most of the interest at this point. I think we could get this market to back off a little bit. Could ultimately, this summer, we go back up into the 102 to 107 area? Yeah, it's an outside shot. If something happens fundamentally that really tightens things up. I just don't see it right now. We've got our supplies picking up again if we look at the weekly EIA stocks report. So, again, I think this has more to do with a short-term seasonal bump, probably going to run out of gas here before too long, and then start to back down.
All right. Thank you for being with us, Darin.
All right, thanks, Mike.
Appreciate your comments and that great sense of humor. Appreciate all of your questions sent in via Facebook and Twitter. Please continue to do so. We are continuing to grow our presence, and we really hope you appreciate the new set for Market to Market. Let us know your thoughts and drop us a question for next week. We'll be sure to get you a great answer. Thanks for watching and have a great week.